Hi, my name is Aziz. Welcome to part 2C of the course Bookkeeping up to Final Accounts. Today, I'm going to discuss with you bookkeeping rules. Now, there are rules of bookkeeping which must always be observed. And the golden rule, one of the golden rules of bookkeeping is that for every debit entry, there must be a corresponding credit entry. In other words, for every giver, there must be a taker. If something is taken from an account, there must be an account in the nominal ledger that will receive what has been taken. So, double entry bookkeeping means that whenever a transaction occurs, two sides will be affected. One account will be debited, while another account is credited. If it doesn't happen that way, your trial balance will not balance, and your other reports will be inaccurate. Most especially your balance sheet, it will not balance. So, the rules of double entry bookkeeping must be observed. So, how do you record assets, liabilities, expenses, and income so as to produce a meaningful set of accounts? Very simple. You need to create an account in the nominal ledger for every category of assets, liabilities, expense, and income in the nominal ledger. Every time a transaction occurs and you need to record it, select a code from your chart of accounts, which I've already described, which I've already talked about. So, in order to get the result that will please you, the desired result, just observe the following rules. Each time your asset increases, maybe you bought an asset, record the new transaction on the left side of the account. In other words, debit the asset account in the nominal ledger. Each time your asset decreases, maybe you sold the asset or you scrapped it, record the transaction on the right side of the account in the nominal ledger, that is on the credit side. Each time your liability, that is what you owe, increases, maybe you bought things on credit, credit the liability account in the nominal ledger, and by extension, whoever your supplier's account. Each time your liability decreases, that is, maybe you paid some of what you owe, debit the liability account in the nominal ledger. Each time your expense increases, let's say you spend money to buy something, that's an item of expense, you have to debit that expense account. That is a debit item in the nominal ledger. Each time it decreases, credit the expense account in the nominal ledger. Those are the rules. Each time your income increases through sales or whatever, or provision of services, credit the income account in the nominal ledger. Each time your income decreases, maybe you've issued a credit note to a customer who has returned some of what you sold to him or her, debit the income account in the nominal ledger. Okay? Now, for the purpose of illustration, take a look at the following T accounts. If you buy a motor vehicle on credit, say, your asset has increased. So you need to record the transaction on the left side, on the debit side. So in other words, debit the motor vehicle account in the nominal ledger. At the same time, the account of the supplier will be credited. So that your trial balance will balance. Remember what I said earlier, for every taker there must be a giver, and for every giver there must be a taker. So, if you buy your motor vehicle and pay for it straight away from your business account, either by check or by bucks or maybe cash, your motor vehicle, your asset has increased. So you need to debit the asset account. And another asset that has decreased, in this case, your bank balance, your cash, your bank balance has decreased. So you need to credit that. That is another asset. One asset has increased, another one has decreased. Double entry. Yeah. Also, in the expenses department, if you buy anything, if you spend money on an item of expense, say office supplies, stationery, whatever, your expense has increased. You need to debit the expense account. In this case, debit the stationery account and credit the supplier's account, because your liability has gone up because you bought it and you haven't paid for it. If you buy, let's say you bought it, if you buy it in cash from your petty cash box, now that what is in the petty cash box is your asset. Okay? Debit the expense account in the nominal ledger because your expense has gone up. There is an asset that has gone down, that is your petty cash balance has gone down. So you credit the petty cash account. On the income side, if somebody buys your services or goods on credit, so your income has gone up, you credit you credit, if you credit the income account because your income has gone up, but your assets has gone up as well. That is, you are now owed money by somebody, and the money that is owed to you is your asset. So you debit the asset account because the assets had gone up. Now, if someone buys your service or goods and pays you straight away, yeah, you debit your bank account because your bank account has gone up by the amount paid to you by the buyer of your goods or services. But on the other hand, you have made money, your income has gone up, so you credit the income account. So, if I just round this up by showing you the rules of double entry, just a summary of the rules. In the case of assets, if your asset has gone up, either through acquisition, you debit the assets account. If it's gone down, either through disposal or scrapping, you credit the asset account. If your liability has gone up, yeah, you credit the liability account. That is, if it has increased. If it has gone down, debit the liability account. If your income has increased, that is, if it has gone up, credit the income account. Maybe you made a sale. But if your income has gone down, debit the income account. If your expenditure has increased, let's say you bought materials for consumption for use in the business, that's an item of expenditure. Debit the materials account. But if it has gone down, credit the expenditure account. So, what you need to do before processing transactions, before recording transactions, it is very, very important that you need to group them according to where you think they should go, according to how they intend to, the categories they belong. Ask yourself, are the transactions assets? Are they liabilities, income, or expenditure? That way, you will never go wrong, and you will correctly observe the rules of double entry bookkeeping. And the end result of that will be a balanced trial balance, an accurate P&L account, and an accurate balance sheet. And of course, a reliable report. Thank you very much for listening, and I see you in part 3 of this course. Thanks for watching, and take care. Bye.